Okay, good day friends, this is Frasers Centrepoint Trust business update for first quarter ended 31st December 2024, dated 22nd January 2025. Right, this is a non-DPU update as FCT pays out dividends every half yearly. Right, so retail occupancy is still very high, 99.5%. Right, shopper traffic is up 2.7% for first quarter 25. Right, and tenant sales is up 2.5%. Right, this is quite a good number. Right, why? I'll show you last year's result. Right, this is the fourth quarter 24 results. They showed the trend for shopper traffic and tenant sales. I'm always more interested in sales because I think that it closely relates to how much money the tenants are making, and that's an important metric to look at because it affects how much rent they can pay. Right, so if you look at last year's result for tenant sales, right, the increase was quite low, right? So first quarter 24, which was the same period as this report we're looking at, only 1.1%. So I would say that 2.5% is a pretty good number, right? The only high point was 4.3 here in second quarter, followed by, you can see, third and fourth quarter were very weak, right? So for this reason, right, and I don't know why they didn't present these numbers here in this quarter report, because that would have made this number look pretty good, right? 2.5%. Because if you look at 2.5%, then you say that, hey, that's roughly equal inflation, nothing impressive. But based on these numbers, it looks good. And also, I will share later on at the end about what I've learned about inflation and wages and how it may affect tenant sales moving forward. Right. Moving on, we'll look at leverage slightly up at 39.3%. Nothing much there. This one I'm very happy to see. The cost of debt seems to have peaked at 4.3%, right? You can see that after that it has fallen to 4.1%, and then now it has fallen to 4%, right? So very happy to see that. Okay, our AI update, 50% pre-commitment ahead of works commencement, right? So that's good. 7% ROI should be very achievable given their track record in the past. AI is on track. With main contract awarded within budget, more continues to operate. Right, last Christmas event brought in an additional footfall of 500,000 compared to 2023. Right, I think that's quite a significant number. Right, so good job to management. Right, we look at Singapore macroeconomics. GDP grew by 4% year on year in 2024, faster than 2023, which grew by 1.1%. MTI forecast 1 to 3% for 2025. Core inflation moderate to 1.9%. Retail sales while RSI is down 1.4% year on year. F&B sales is up 3.9% year on year. Orchard Road rents up 0.8% quarter on quarter versus suburban up 0.5%. Year on year, Orchard Road is more significant at 4% and suburban more 1.6%. Right, so they expect island-wide retail rents to recover to pre-COVID levels in 2025. Right, you can see a nice uptrend here for the suburban malls. Right, there's very little supply, all right, for retail coming out in Singapore, which is expected given our space constraints. Right, if you look at occupancy wise, between all the colors, right, Orchard Road, downtown, rest of Central, Fringe, and suburban, you can see suburban is by far the highest occupancy, indicating very high demand, which may indicate that FCT should trade at possibly a premium, right? Prime retail growth by submarkets through 2027 here is given. Okay, positive factors to support long-term growth for retail. Right, you can see new homes in the areas that FCT have malls, right, such as the North, Northeast, and East region. Right, that should expect to increase shopper traffic and hopefully drive sales growth. Right, so this is organic growth we are very happy to see. Right, higher household income to support retail spending. Right, medium household spending grew over the long term. Yeah, this one is interesting, and here I will share a bit about what I learned about inflation and wages. Right, I actually saw some investment fellows say that generally speaking, when inflation happens, right, you'll find that it's a big pinch to the workers because their wages haven't corrected upwards to match the inflation. But the wage catch-up, right, normally happens after 2 to 3 years, right? And this, I think, bodes well for malls in general or retail spending in general, primarily because I think we have already gone through the inflation part. That means we are already feeling the pinch to our wallet, and we realize that, hey, our wages are not growing. So over the next 2 to 3 years, our wages should catch up with the inflation that has already happened, right? So in the past maybe 2 to 3 years, inflation may have been something like 4 to 5%, or maybe even higher. Now it has dropped down to maybe 2%, right? But our wage didn't go up by 4 to 5% in the last 2 to 3 years, right? So that catch-up should happen in the next 2 to 3 years, which bodes well for general tenant sales, because this should improve their buying power. Of course, we know government supporting us with CDC vouchers and a progressive wage model for lower wage workers to help improve retail spend capacity, right? So all these things, I think, are valid things that should support tenant sales, right? New developments in the North region. This is talking about the RTS link. I think the RTS link, to me, is overblown in terms of concerns, right? If FCT is actually trading below NAV primarily because of this, then I think that it is possibly a steal, right? I'll try to explain why also. Let's just not worry too much about the additional new homes. This one we already talked about, right? The fact that, okay, there's Causeway Point and North Point City here that will benefit from the additional homes being added to this area. But when you look at Johor's link to Singapore via this RTS link, right, and also the recent economic zone proposed with Johor and Singapore, what normally happens is that when you have RTS line to this part of Johor, right, the shops around this area and the housing around this area, suddenly the price will just sharply increase. Why? Because they know that people coming across the causeway have money to spend, and the price of the goods in Singapore is much higher than Malaysia in general, right? But in this area where it's very close to Singapore, the prices will start to spike because they realize that, hey, you buy something in Singapore for $1, Malaysia maybe sell 50 cents. That means I can charge you 80 cents, right? You still make a savings, right? So if in the end of the day, what happens is that there is a discrepancy between the regions in this area near the RTS line, right, and the rest of Malaysia, just because of the additional demand coming in from Singapore, and this will in turn dampen the demand, right? So if you go and look at Channel News Asia, I think they just came out with a video to talk about the fact that Johor's housing around this area, right, is actually going up in price because of the concerns that more and more Singaporeans will go over there, right, to stay and to buy things, right, and then the prices just start to go up. So this actually will dampen the demand, which maybe is high initially. That's even a big question mark about whether it's true or not. So I think there's a lot of overblown worries about the RTS line, how it will affect the malls of FCT, right, in my opinion anyway. Okay, so anyway, moving forward, right, they're talking about Causeway Point and North Point City, North Wing, right, revenue wise going up, that's fine, that's great, right. Balance sheet wise, leverage slightly up, not so good. Interest coverage ratio is 3.3 times, that's good, right, it's still above 3 times. Average cost of debt, we talked about this, we are happy. It looks like it have peaked about 1 year ago, right. Debt maturity, I think okay with 3 years, right, it's higher than the previous version, right. Percentage debt hedged to fixed interest rate 65.5%, right, slightly lower than the last time, but I'm not too concerned about this, right. Debt maturity wise, I don't think they have any more issues this year. Yeah, I think so. This year they are done with worrying about that. So that means to say, I think their bank borrowing should be around, or their cost of debt should stay around 4%, right, until next financial year. Right, in terms of occupancy, you can see all 100%, don't have to worry about this. This one is slightly down, I think because of AEI or something. I'll look it up later, right. So the rest is also very high, right, and even Central Plaza has improved slightly. In the past, this used to be slightly lower at 95%. Right, we talked about this. Right, I think this was a decently good result. The rest I won't talk about so much. Yeah, I think we've talked enough about Hougang Mall. So yeah, but some things I didn't know. Hougang Mall seems to be an underserved area, right? Apparently the retail space is quite low, right? So 2.8 square feet per capita, which is much lower than the national average of 12.1 square feet, right? So that means to say Hougang has a shortage of malls, which probably explains why they are popular shopping mall. Right, this one I wasn't aware, so just sharing. Right, I think I won't talk about all this because it's quite standard stuff. Right, so I'll just look at some reports. Right, so yeah, so you can see Philips Capital has a buy call, right? And I think this is the main summary, right? Slight dip in occupancy is attributed to Tiong Bahru Plaza, which underwent small-scale AEI, right? So that was the part that I was talking about. The slight drop in occupancy is because of AEI, right? Hougang Mall is clearly again due to AEI. White Sands apparently got single vacancy on upper floor, but still very high occupancy in general, right? Tenant sales I think looks good as overall. Cost of debt, we talked about it. Yeah, the rest nothing much to say lah. Right, I'm not sure how they get $2.44, right? I think they expect some kind of acquisition here, right? Not sure whether this will happen or not, right? DBS has a buy call, right? In fact, they in terms of equity picks, they added 11,000 shares at 2.11 to their dividend side, right? They say valuation is attractive at 6% yield, but this based on 2.11. I think the price now is 2.13, right? PB at 0.94x, right? So yeah, I think that generally the REIT is doing well, and I think in terms of earnings, they are supported by organic growth in their areas like the north, northeast, and the east side, right? So I'm quite happy with the results in general, right? Again, no buy or sell calls, none of this financial advice. Thank you for listening.